If you're a grade 10, grade 11, or a grade 12 accounting learner, let me ask you something. And the question is, at the end of the financial year, how do you know exactly what stock you really have left? And what happens when numbers don't match? Right there, that confusion right there is exactly the reason why most of you accounting learners lose more marks. Because year-end adjustments are not just calculation. They are about correcting the truth about the business. And in this video, I'm going to break down step by step the following. Number one, adjustment of trading stock and trading stock deficit. And number two, adjustment of consumable, stationery, packaging, and consumable on hand as year-end adjustment. And by the end of this lesson, you will understand exactly what to adjust, why we adjust, and how to answer exam questions with confidence. No confusion, no guessing. Now, let's fix this problem for you once and for all. Hello and welcome to this RMH Accounting Extra Lessons Academy, proudly powered by RMH Academy of Business and Finance. Now, before we calculate anything, you need to understand exactly why the adjustment exists. And that is, at the end of the financial year, the business must show the truth with regards to exactly what stock is left, what has been used, and what was missing. Because if we don't adjust, the profit will be wrong. Adjustments are there to ensure that financial statements are accurate, relevant, and reliable. Now, let's get done with this thing once and for all. You ready? Let's get started. Number one, adjustment of trading stock and trading stock deficit. You probably heard of that. Now, listen to me very carefully. When the enterprise, if in the business, the perpetual inventory system is used, then the trading stock account can be used or can be regarded as an ongoing record of that stock. It can be used as an ongoing record of the movement of the stock. Now remember that the trading stock is an asset, a current asset, and it increases on the debit side and it decreases on the credit side. Now, when the trading stock is purchased or bought, then the trading account will be debited with the total purchase price of the trading stock plus the cost incurred in getting the stock to the premises. For example, carriage on purchases, freight, and railage inwards. Right? Now, depending on the type of a transaction, the trading stock will be credited with the following. Number one, the bank account, provided the transaction was a cash purchase transaction. This means the trading stock will be debited and the bank will be credited. It will also be credited with the creditor's control, provided the transaction was the credit purchase transaction of a trading stock. In other words, the trading stock will be debited and the creditor's control and the creditor's account will be credited. Number three, it will be credited with petty cash, provided that there was a petty cash purchase of merchandise, right? If there was a purchases of merchandise on petty cash, then it will be credited. Are you with me? Now, when that trading stock is sold, then the cost of sales of that particular transaction must be calculated and recorded in the general journal and general ledger. Right? Now, this means that the cost of sales will be debited as an expense and the trading stock will be credited. Now, If it happens that the debtor returns the sales, now the sales returns by debtors will cause the trading stock to increase. For example, we sold the stock on credit to a debtor. Then the debtor decided to return that stock. So what happened is that the trading stock will be debited and the debtor's control and the debtor's account will be credited, right? Now, the credit purchases return of stock will cause the trading stock account to decrease. For example, if we purchase a trading stock from a supplier on credit and we later on decided to return that trading stock, the trading stock account will be credited. That transaction will cause the trading stock to be credited. So in other words, the trading stock will be credited and the creditor's control and the creditor's account will be debited. Make sense? Now, if the owner donates or withdraw trading stock for his or her own personal use, this will also cause the trading stock to decrease. In other words, donation or withdrawal will be debited and the trading stock will be credited. Are you with me? That is with regards to the transaction that will take place with regards to the trading stock. Now, at any given point in time, the trading stock account must reflect the actual value of the trading stock on hand in the premises. At the end of the financial year, the physical stock taking will be done to determine the actual value of the trading stock on hand in the enterprise. Right? Now, if there is a difference between the closing balance of the trading stock account and the value of the physical stock taking, then the difference needs to be adjusted, right? So this means if the physical stock taking reveals a smaller amount than the closing balance of the trading stock account, then there is a deficit. Now, a deficit can occur as a result of theft of stock, obsolescence of stock, damage to stock, or destruction of stock through fire or flood, if the stock is destroyed through fire or flood, right? Now, that is with regards to trading stock deficit, how the trading stock deficit can occur. Are you with me? Now, the value at which the trading stock is reflected must correspond with that value as revealed by the physical stock taking, right? Now, if the physical stock taking reveals that the stock on hand is 31,000, then the closing balance of this trading stock account cannot be 32,000. So this value will have to be adjusted back to 31,000. So this means that the business has suffered a loss of 1,000. Now, once the amount of the trading stock deficit has been determined, then a new account must be created in the general journal, which represents the loss that the business has suffered. And this account is known as the trading stock deficit account. Now, the trading stock deficit account will be debited and the trading stock account will be credited, right, with the amount that the business has lost, which is 1,000. Now, in this case, the value has been adjusted to 31,000. Make sense? So that is with regards to the trading stock and the trading stock deficit as year-end adjustment. Make sense? I hope it does. If you understand this concept very well, comment on the comment section and say, I understand very well. From now on, we are moving to number 2, which is adjustment of consumable, stationery, packaging, and consumable on hand as year-end adjustment. Ready? Let's get it done with it once and for all. Now, consumables, stationery, and packaging are dealt with on the last day of the financial year, according to the same principle as that of the trading stock. Now, in terms of accrual concept, consumable, stationery, and packaging that have actually been consumed may be counted to determine the net profit or the net income for the financial year. Right? Now, consumable, stationery, and packaging accounts are dealt with as owner's equity in the general ledger. Are you with me? Now, when consumable, stationery, and packaging are bought or purchased, they are taken up as inventory and the expense account will be debited. Right? Now, consumable, stationery, and packaging accounts will reflect the total expenditure on consumable, stationery, and packaging account at the end of the financial year. Now you need to understand that consumable, stationery, and packaging are bought during the financial year for the purpose of using them, not for the purpose of reselling them. Right? Now, at the end of the financial year, the physical stock will be done. Now, when physical stock taking is done, consumable, stationery, and packaging that have not been consumed, they will also be counted. Right? Now, even though consumable, stationery, and packaging are bought for the purpose of using them, not all of the supplies have been used up. Now, that part of consumable, of stationery, and packaging that have already been or that have been consumed or used will be counted as an expense. Right? Now, the remaining part of consumable, stationery, and packaging that have not yet been consumed, they are considered or they are regarded as consumable on hand. Right? They are considered as consumable on hand. Now, once the amount of consumable, stationery, and packaging that have not yet been consumed have been determined, then a new account must be created in the general ledger. This new account, it represents the amount of consumable, stationery, and packaging that have not yet been consumed. And this account is known as a temporary assets account, known as consumable on hand. Now, consumable on hand, it's an asset, but it's a temporary assets account. Now, that part of consumable, stationery, and packaging that have not been consumed will be transferred to this temporary assets account, and consumable on hand will be debited and the expense account will be credited. Are you with me? Now, that's how the consumable, stationery, and packaging account are adjusted. So the adjustment of consumable, stationery, and packaging account are done by means of journal entries in the general journal. I hope that makes sense. Now, if this video has helped you to understand adjustment of trading stock and trading stock deficit as year-end adjustment, as well as adjustment of consumable, stationery, packaging, and consumable on hand as year-end adjustment, comment on the comment section below and comment I understand. And also do not forget to comment and let me know what other video you want me to do for you. Tell me exactly where are you watching from. Tell me your name, where you're watching from, and I'll make that video for you, right? Now remember, in this academy, RMH Accounting Extra Lessons Academy, we don't just learn accounting, but we master accounting, right? Now, until next time, me, the relentless Monama Humphrey the man, humble and intelligent King Hannah boy, the RMH himself, and the accounting subject assassin, I'll be with you in the upcoming next video, and make sure you see me in that next upcoming video. Until next time, have a wonderful accounting journey.